Now, first up, Governor of the Bank of Ghana, Dr. Ernest Addison, has assured of robust measures to help minimize the impact of the debt exchange program on commercial banks. At a presser Monday, the governor noted that the regulator has also come out with a different financial deal to support commercial banks. Take a listen.
So there are a lot of things that the Bank of Ghana has agreed to do to help the banks deal with the impact of the domestic debt exchange on capital and liquidity. This is a financial sector stabilization fund to be supported by donor partners, already capitalized at $1 billion. Already we have the World Bank pledging to support it with $250 million. Right. Bank of Ghana, we have our own liquidity arrangements already for the banks, and therefore we do not plan to be part of this financial sector stabilization fund, which is mainly financed by the external development partners.
And the Bank of Ghana has also agreed to reduce the cash reserve ratio on domestic and foreign deposits, as well as reduce capital consideration buffers for commercial banks. Take a listen.
The issue of the results of the Bank of Ghana stress test, yes, the bank did the stress test on the ability of these 23 or so banks to withstand the impact of the debt exchange. We did see the numbers, the implications for liquidity, and the implications for capital. And on the basis of that exercise, the bank came out with regulatory reliefs, which we thought would help them deal with the impact on liquidity and capital. We agreed to reduce the cash reserve ratio from 14% to 12% on domestic currency deposits, reduce the cash reserve ratio from 13 to 12% on foreign currency deposits. These measures gives liquidity back to the banks. It addresses the issue of the impact of liquidity. We also dealt with the issue of capital by reducing the capital conservation buffer by 3%. So the capital adequacy ratio was reduced from 13 to 10%.
All right, joining us on Zoom, Associate Professor of Finance at Andrews University in the U.S., Professor Williams Pepra, also financial analyst and banker Christian Tishijan, to react to this. I want to start with you, Christian. How do you anticipate the banking sector players will react to these remarks by the central bank governor? Appears they've got everything figured out. He says we have a financial plan to support banks.
Very much, Daryl, for having me. Good afternoon. Of course, the Bank of Ghana has, since time immemorial, had a mechanism of support in terms of liquidity, which was known as the Liquidity Assistance Framework. I think it was amended somewhere February of last year. It's always been there, giving support to the banking institutions, those that run into challenges as far as liquidity is concerned. With a stability fund that is being established now by the government of Ghana and its partners, we expect that support will give the financial sector a more robustness, is going to help them to remain stable and then calm. So there are mutually exclusive schemes that are going to run. And what the governor is saying is that at the end of the day, to make sure that the financial institutions remain liquid and robust is the essence. And the measures that they've put in place in reducing the capital adequacy ratio from 13 to 10%, with the regulatory reliefs as far as some of these cash are also concerned, from the 14 to 12% for the local currencies and from the 13 to 12% for the foreign currencies. All of these are aimed at making sure that the financial sector actually remains very robust and will be able to withstand all of these shocks that are coming up as a result of this debt exchange program and its ramifications.
Professor Peprah, how convincing are these plans announced by the governor? You have been raising some questions.
Yes, so let me say that it's good that probably they have done the sensitivity analysis to arrive at a way to support the banks. So the governor mentioned that they are looking at providing liquidity and capital support by reducing the capital requirements. The question I've raised is that what about profitability for the shareholder? It means that shareholders of banks are going to have a major impact. Though they may have cash, though they may have meet the capital requirements, but then the banks will not be profitable. This may force the banks to possibly lay off some workers. Because as your capital reduces, the bank will not be able to take up some big tickets or transactions, which will mean that they may have to free the hands of some workers to leave. Also, as the banks are going to see a major impact in their investment income reduce because of buying into the debt exchange program, they may not be able to also provide funds or dividends to shareholders. Already, central bank has put a hold on payment of dividends to shareholders. So if the central bank is restricting these banks to go into or benefit from the stabilization funds, it means that they are tying their hands, and they may also require their shareholders to put in some more money. And the question is, where are the shareholders going to get the money from? So as they only look at capitalization and liquidity, I'm recommending that they may have to extend the discussion to profitability and sustainability analysis of these banks. You may have the liquid, you may be liquid, you may meet the regulatory requirement of capital adequacy, but then you'll not be able to do major transactions, which is going to affect the bottom line. So these are the other areas that probably we may have to look at. We may also, as I mentioned, that anticipation that banks may be forced to lay off workers because volumes of transactions will be reduced. Even if we don't take care, challenges of profitability will affect the banks developing in the form of technology and also venture into innovative areas to provide funding for companies. It's very critical that the central bank goes back, in my opinion, to also add the option of profitability. Can they also make a case to GRA to look at the tax implication, because the banks are being levied too much that if, because of the debt exchange program, government will have to give them some reduction in corporate taxes and also the levy that they are paying to reduce those taxes to free some funds, because shareholders must also, within the periods, will still have to be paid some form of dividend. So if the central bank can make a case for the banks on the line of reduction in a little bit of taxes, especially corporate tax, that will really help.
Okay, and Christian, as we talk about profitability, the central bank indicating yesterday that the economic challenges are affecting the banking sector severely. Profitability declined by almost 19% in 2022. Just how bad is this situation for banks, and what are the implications?
Yes, generally the banks are actually economic players themselves, and so they have streams of income as well as they have outlets for expenditure. You see, so far as utilities have increased, obviously they are going to feel the pain or the ramifications of it, because electricity has become expensive and they run on a lot of power. If fuel prices are up, again they are going to suffer, because they also run on a lot of fuel for their marketing activities as well as their operations. So we also know interest expense over the period have also gone up. If you check the figures as at last year first quarter, we're doing just about 13-14% in T-bills. Now that T-bills are over 35%, the banks also adjust their rates, that is their fixed deposit rate, to, if not match up, something in the same region of around 30, 31, 32%. And so obviously, if you are paying 13% interest expense and now you have to pay interest expense, the rates being about 30%, it's more or less double. The interest expense has doubled. Now, on their income, with the economic challenges as we are going through as a country, loan impairment should be on the rise, and therefore provisions will have to be made on them. Trade activities, I also suspect, have also declined because of the volatility of what we find within the forex market. So generally, so far as income line keeps going less and then expenditure also keeps growing, generally we are going to find a situation where it is going to affect their liquidity, their profitability position. So let me stress that it is not a dire situation as some people want us to believe. It's not going to lead to the collapse of some of these institutions. But as my professor at Andrews University rightly said, if the Bank of Ghana can come in to make a case to GRA for and on behalf of these banks, it's going to give them a lot of relief for the investors who've also invested in some of these institutions, also have some level of returns on their investments.
I want us to listen to the Bank of Ghana governor again with response to those concerned about the future of commercial banks going forward.
Issues, and you manage crisis. During a crisis, certain things occur. It's similar to the issue raised by Thomas on, priority areas for foreign exchange. All of that were crisis measures. During a crisis, you're short of foreign exchange, you try to identify your critical imports and meet those imports, first. We do not expect that this crisis would continue. We expect that the crisis will be resolved. And these measures are, in a sense, temporary, and we do not anticipate that we would continue to be in a situation where we are persistently short of foreign exchange and therefore be looking for, items to exclude from our financing list. No, that's not the vision.
Addison also speaks about some actions that will be taken against banks that sold cocoa bills to retail investors.
Cocoa bills, like Bank of Ghana bills, have been in existence for a very long time, right? And therefore, I'm sure there are people who, were not properly briefed on, the full rules regarding, the sale of those bills. But having said that, I think we would eventually find out, which banks were involved in that particular practice, and the appropriate discussions will be held with them.
All right, I'm going to throw it to you, Prof. Pepa. Your reaction to both clips?
So on the issue of the banks selling cocoa bills to customers, which they were not supposed to do, I would say that, again, the Bank of Ghana failed with their regulatory and supervisory functions. What I have noticed is that they become reactive and not proactive with issues. My recommendation would be that with the central bank come up with a policy that all banks, before they develop any product to sell them to customers, may seek clearance or approval from Bank of Ghana, because that should be their work. So the banks put together a product which is in line with the cocoa bills, knowing that they were not supposed to do that. And the regulator, you allowed it, and now you come back to complain. So if they are really doing their regulatory function well, this wouldn't have come up to this stage. So this is, to me, my bit on that one, that Bank of Ghana may also strengthen their regulatory functions, make sure that when products are developed by banks, before they go out and market them out to customers or clients, they get approval from Bank of Ghana. It's like the Food and Drug Board Authority. You cannot produce a drug and just go out and sell to customers. You need to go to Food and Drug Board and check the clearance. Finance is also like that. The bank's product is a drug that they are selling to individual customers. The Bank of Ghana, you are the regulator, so you should have checked and make sure that yes, this product should pass. And now customers have gone to purchase it, and you want to go and punish the banks. You were probably sleeping on duty, so that must be also checked very well.
All right, and Christian, the central bank governor saying the integrity of the banking system will not be compromised amid the debt exchange crisis. Your thoughts?
Yes. Before that, let me just put this on record. With the financial institutions, or specifically the banks, before you can roll out any product, it has to be approved by the Bank of Ghana. So that I think we'll have to do a bit of interrogation to find out exactly what happened, that some of these banks were able to sell this product to retail customers, which wasn't supposed to have happened. So I know, for the record, I know authoritatively that any product that goes on the market, so far as the banks are concerned, must receive the ascension or the ratification from Bank of Ghana. Now, to your substantive question, I think with the two schemes that are going to run, that is talking about the financial sector fund that is now coming up, and then the Bank of Ghana framework for liquidity support to these banks, they are mutually exclusive schemes. What the governor is talking about, he doesn't want the situation where a bank, for example, will run into liquidity challenges because it failed to manage its balance sheet properly, and then now goes to the fund for that support. They need to protect the integrity of the industry. So whatever framework that is in place that qualifies for the already existing framework where you can have access to such liquidity support, it should be there. And then if you also run into liquidity challenges as a result of your participation in the debt exchange program, yes, then you can be led to the financial stability funds to have that liquidity support. So he just doesn't want the two to be mingled. It has to be treated exclusively because they've all got their separate dynamics as far as both schemes are concerned.
All right, I want to talk about some other things that we are following keenly for our audience this afternoon to do with the debt exchange program. We know that today is the deadline day, and we are anticipating, or government said they were going to come out with a new deal sort of to get the buy-in of individual bondholders. We haven't heard anything yet. Also reporting this afternoon, reports we are getting is that there could be an extension. Prof. Peprap, can we afford another extension?
I mean, I don't know how long government want to extend this thing, if it's a week, because the document must get to IMF mid of February, because the meeting is in March. So I really don't know what government expects. If they think that they can really get a lot of investors to sign on within a week, that is very fine. But government may have to make sure that by the end of or third week of February, we have our documents with the fund, because they meet in mid of March. And so that is going to be a major challenge for government. Also, I understand that some institutional investors will need in the support of their shareholders. Probably those discussions ongoing have not been concluded, so government will have to tread cautiously, not to go to IMF with anything that is not signed or that have not been documented. So probably a week extension, if that is what they want to go, will be well. Just that the Ministry of Finance, we need a team that works swiftly to be able to provide all the needed documents to IMF.
Any idea, Prof, what a new deal may look like?
I mean, from what we are hearing, the new deal probably will affect individual investors, because we have not heard anything on the table for them. So that is, in my understanding, probably government has maybe come up with some profiling or segregation of these individual investors. The category of investors that will be exempted, those that will have to receive maybe a 10% coupon rate in 2023, those that will receive maybe a 15% coupon rate based on the ages of the investors or how they profile them. So something like that classification probably are needed. And then also exempting, in my opinion, pensioners from this kind of debt restructuring, because they rely on it for current income to support their lives. So government may have to look at that one. But if you are a young guy, probably government may give you some, you have time, so government may decide to give you some coupon above the 5%, probably individual investors will accept.
Okay, my final question to you, Christian, what's your understanding of what happens after today for individual bondholders that who do not sign up onto the debt exchange program?
I think it's important that the government comes out with something comprehensive, because I mean, in trying to reduce our debts, debt to GDP ratio from the over 100% to 55%, that is the ideal situation. It's not going to be a one-day work, and therefore requires a lot of consensus building. So maybe government is not done yet engaging with the individual bondholders, and would need a bit of time to be able to convince them to actually sign on to some of these programs. I think that should be the utmost objective. So maybe government is not done yet. Let's just give them maybe 1 week to see if they'll be able to finalize with some of these individual bondholders. And definitely, it's not going to be wholesale to say everyone is going to be exempted. There are going to be some dynamics that are coming into play. For example, pensioners hearing from the grapevine are going to be exempted, so that those people within the youth category who've got a bit of time to, have other investments will be given the time to do some of these things. So it doesn't come out wholesale. We know there are going to be certain segregations, and the dynamics are going to be made different in terms of age, and then some threshold in terms of the amount involved.
All right, Christian Teshi-Jan, financial analyst, also Professor Williams Pepra of Andrews University, joining us to analyze issues to do with the banking sector and the way forward for them amid the debt exchange program, and also deadline day for the debt exchange program. Well, let's switch topics, talk about gold for oil, because the Bank of Ghana is insisting that the initiative will help reduce the pressure on the country's foreign exchange reserves. It has also rejected calls for its cancellation. Head of Financial Markets, Stephen Opata, has been speaking to journalists in Accra.
Our strategy for gold is gold for reserves and gold for oil. Gold for oil is coming from PMMC. Gold for reserves will come from the other mines and the aggregator programs. So that answers your questions. It's not just it's gold for oil and gold for reserves. So this is very transformational, and I urge all of you to give a positive narrative about it. Why should it be suspended? This is a good program. We've never done this. I've told you already that if this goes very well, we have a very sustainable way of buying oil products for the country. Not only that, but the pressure on our reserves will stop. We're able to build on our reserves. Who should stop this program? It's a very good program. We are talking about oil and gold. Yeah. Gold has its own peculiarities as far as correlations are concerned. So there can even be some diversification benefits. I will urge you to look at how oil behaves and how gold behaves. They are two commodities, but they behave differently. Gold, in times of crisis or times of shocks, goes up. Yes. At that time, you don't expect oil to go up. So I think that in terms of a correlation mix, it's not too bad. But that is not what we are even looking at. What we are looking at here is that we are using, Ghana is very rich in gold. The largest producer of gold, a developing country producer of gold, the largest. In 2021, we produced about 130 tons. That's a lot. So we have a lot of gold to back this program. This program is being driven by Dory gold, unrefined gold, right? So it's quite different from the gold for reserves, which is monetary gold that has to be refined into certain characteristics. This program is quite faster than that.
Now, the Ghana Revenue Authority will begin fresh prosecution of managers of some shopping malls flouting the electronic value-added tax law. According to the authority, its investigations have revealed that some businesses are issuing tax invoices without using the electronic system. This has led to the arrest of managers of ShopRite, China Mall, amongst others, who are expected to face the law. Accra Area Enforcement Manager at the GRA, Joseph Annan, has been speaking to Joy Business.
The China Mall they were not issuing the EVAT invoice. Then Palace Mall, they are also issuing receipts with duplicate signature of the Commissioner General. And then we have Snyder Shopping Center, they are also issuing non-EVAT invoice. And then we have Fresh First Limited, that's Second Cap. They are also not issuing EVAT invoice. All these places are centered at Spintex. What we have done is to zone the taxpayers into areas. So today we decided to focus on Spintex. Tomorrow we'll be moving to another area until we are done with. We'll continue from area to area to reduce time and also save cost. So today we visited these places. And what we have done is to arrest managers of these companies.
All right, that's our program this afternoon. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. You have the day's latest from over there. My name is Darryl Kwa. We'll see you same time tomorrow. Goodbye.